Hi guys, it's Brian. We're going to grab some of our favorite slides this month to talk about what's going on in markets. There's obviously a lot of headlines about tariffs and the new administration in the White House and Congress, and stock markets are having a pretty big red reaction depending on which day you look. So I thought we'll go through some of our favorite slides from our deck that we use with clients and talk about how you should feel right now and what you should be doing in your portfolio. All right, so very foundational slide. This is what problem are we trying to solve? And the number one core reason that you invest in the first place is displayed right here. You're trying to outpace inflation so that your money is worth the same in purchasing power in 40 years as it is today. If you bury your money in the backyard and you dig it up in 30 years, your money will not buy the same amount of eggs and ice cream and gasoline and house and everything else. And so inflation is kind of this silent killer. It's very easy to forget about. For most of the last 20 years, we've had really muted inflation. And then, of course, we've had a lot of headlines with some very real changes in inflation the last couple years. And so it's something you should be thinking about all the time, whether it's high or low. So that's our number one risk. What this green line up here shows is more like a stock or real estate portfolio. You're going to have some of that volatility. It is a risk, but it's not the number one risk. And so that could be debated heavily. But over the next 30 years, having your account go up 20 and down 15 and up 6 and down 19, that's not the number one risk, because that up and down over time is what allows you to beat inflation and not have a loss of what we call real purchasing power. All right, this we call closing the behavior gap. We're not trying to talk to anybody like a third grader, but it's very easy to get caught up in emotion. So I think the best thing when markets are tough is to acknowledge that you're having fear or uncertainty, or not trusting the headlines that you're seeing and the plan that was set up for you originally. This is one of my favorite slides. It helps us talk through and sometimes even poke fun at the emotions that we all feel around investing. And so a couple years ago, I think we were on the left side. There was optimism and excitement, and then at some point, probably overconfidence. I would add FOMO somewhere on that left side of the chart. And right now, people are somewhere around regret or fear or panic. Certainly, a few folks I've talked to feel kind of despair. And so you have to acknowledge those emotions and talk through them. Certainly call our team and talk through how you're feeling with your investing strategy. What you don't want to do is truly panic. We don't want to start selling good investments. We don't want to go into cash and try to perfectly time the market. The hardest thing about selling out is that you now have to make a second decision to get back in. And it's really hard to get lucky twice and time that perfectly. So instead, you stick to the plan, you talk through the emotion and the feelings of investing, and wait until we get back to eventually happy markets again, and the whole cycle starts over. A couple of the sentences at the top there are just things that are very common for us to hear. It's easy to look back through history and think, I should have known '08 was coming. I should have known COVID was coming. I should have known the 20% downturn in 2018 was coming. In reality, people do not predict those things very well. The smartest people in the world get it wrong all the time, over and over and over. And so that's not a strategy that works. What works is own good investments, get good financial advice, talk through how you're feeling, and we're all going to come out the other side of this and have good returns again.